The Dow was trading indecisively right about until this point where it started selling off hard. And as you can see, it was trading below the T-line, this black line right here, the 8 exponential moving average. So even though it was iffy up until this point, there was still long positions that were working well, but the market started cratering when they started trading below the T-line. And the reason that the Dow was iffy was because the NASDAQ was still trading above the T-line. And there's a very simple rule of the T-line. As long as you close above the T-line, you're in an uptrend. But it was when we saw the little hanging man signal after a few dojis that when they gapped it down and started trading below the T-line in the NASDAQ and the Dow, that told you that all the bears were now pushing things down, that it was time to be out of long positions and adding to short positions. And this provided some very simple parameters as when to get out of a position. We saw the doji gap down, but it was indecisive on BITA, B-I-T-A. What did we need to see the next day to stay in this position? It better have opened positive and traded positive back up above the T-line. The fact that it opened lower, we've got also not a simple rule of the T-line, but we also have a simple rule of the doji, that it's going to move in the direction of how they open the price after a doji. So the fact that they opened this one lower, that told us they weren't taking it up this way. We should be out of the position immediately, and there was more potential downside. Which leads to the question, should we sell at everything with the market selling off? And the answer is no, because we can definitely see our recommendation on PRAN was still trading positive. Not only was it not trading below the T-line, but they were staying above the 3T line, which just tells you there's a lot of force in this uptrend. So the different signals and patterns that we can identify in candlestick analysis, like the fry pan bottom and the doji sandwich, allows us to take advantage of price moves that are not going to be affected by the market in general. It also tells us which positions to be out of and which positions to be in. A lot of people have a hard time. In this case, we closed out HIMX because it closed below the T-line. Today it did a kicker type signal, which told us to buy it right back. Why? Very simple reason. We got a kicker signal, which is a very strong signal, number one. And number two was closing back up above the T-line. It was telling us that on this strong signal that we could be in for the next wave such as this. And as we can see, the market was sluggish today, and this was up fairly strong. Being able to visually analyze what's going on in investor sentiment allows the investor to be in the right position at the right time, no matter which way the general market is moving. That'll be it. We'll see you in the chat rooms.